Hey folks, welcome back to the channel. Today I want to talk about an update I'm making to my portfolio. I bought the Canadian Apartment Properties REIT a few years ago, and I thought it would do better, but it's pretty much flat since I bought it, down about 1% here. CAP-REIT is a real estate investment trust that buys and manages apartment buildings and they rent it out to end users. The ticker is CAR.UN on the Toronto Stock Exchange. When I bought this, I thought with rising population in the country and rising rents, and at the time I thought interest rates were going to stay pretty low, it would be pretty good for real estate investment trusts. However, if we take a look at the weekly chart, you can see ever since this big drop during COVID, it's kind of just trading within this range. It has pretty strong support down here, touching roughly this line 3 times, but it's also having trouble getting past this line as well, which acts as resistance. And I think part of the reason the stock hasn't done that well is because it's not really capitalizing on the increases in rent. You can see the most recent earnings here for November of this year, so that's last month. The reported revenue was 268 million. Compare this to a year ago in November of 2022, 252 million. So that is an increase of just 6%. But of course, year over year, rents have gone up a lot more than that, depending on which city, of course. But even if you look across all of Canada, rents have been going up a lot over the last couple of years. The average rental price in March of 2021 was $1,670, and 2 years later, it's gone up to $2,000. And of course, now it's even higher because it's the end of the year. So we've seen double-digit rental inflation in the last couple of years in the country, especially in larger cities. The rents have been going up faster than in previous years, but we're just not seeing that growth represented in this company's revenue and earnings. So I have decided to sell all 50 of my units this upcoming trading day, and I'm going to pull the money out and maybe next year do something else with it. This is in my tax-free savings account, so I don't have to worry about paying taxes on the distributions. Speaking of the yield, CAP-REIT was increasing its distributions year over year up until 2020, and then there was one more bump in 2021, and they've kept it flat since then. So I like to buy companies with dividends that are increasing, which is part of the reason why I went into this REIT in the first place, is because I saw its historical growth in distributions. However, after I bought it, the company stopped raising its distributions to unit holders. So after I sell this REIT, I'm going to keep an eye on it, and maybe after 1 or 2 years, if the company starts to increase its distributions again, then that'll probably mean it's more confident in its future, and I may consider going back into this stock. And finally, because at a 3% yield, which is what this REIT is currently trading at, it's not really worth the risk holding this because there's a chance the price could go down even lower. And the 1-year Canada bond is at 4.68. So you'll get like 50% more yield just by holding a bond for 1 year than holding this REIT. So for now, I think REITs are generally not looking too good because interest rates are so high. The cost to run the business, like the interest rate, is hurting their bottom line. So maybe if interest rates starts to fall and once higher rent prices are established and we see that in the earnings reports, which could be next year in 2024, then maybe real estate investment trust will continue their long-term trend of going up like this, because right now in the last few years, most of them have been pretty much just going up and down in a range. But who knows? What do you guys think of REITs right now? Is it a good time to buy, or you're not bullish on them like me? Anyway, thanks a lot for watching. Have a great holiday. Good luck with your investments, and until next time.